Today we're going to go over Acushnet Holdings. They're pretty much the golf brand, everything golf related. So pretty much these are all the different brands they hold. A whole collection of golf brands and products. So I always like to start with the quarterly data just to see how the company is recently doing. We'll go ahead and talk about total revenue today, earnings per share, and also our findings in cash flow from operations and also the cash flow per share. So total revenue, as you could see, positive year-over-year growth for the past 6 quarters. It's not crazy growth, average growth of 6% per year, but they are growing slowly. So for the latest quarter that they posted, this is the third quarter of 2023, they posted 86 cents per share due to higher average selling prices of their golf balls. Alright, so one of the good statistics to watch right now is going to be the cash flow from operations and their cash flow from share. So this is the cash the company generates through normal business. Up 461% from the previous quarter. They made $31 million in September of 2022, $31 million in cash flow from operations, and in 2023 they made $177 million. That is a 461% increase. That is huge. And previous quarter before that is a 180% increase. And when you take that to cash flow per share, 2022 they made 26 cents a share. They made $2.42 a share in September 23. That is an 830% increase in cash flow per share. So, and the company is putting its spare cash to good use. So I pulled up from Value Line. It says during the September quarter, they repurchased about 1.1 million of the shares outstanding stock. So they are, with all that extra money they're receiving, they are purchasing back their shares. They also talk about how the stock is currently pegged to outperform the broader market averages over the coming year. So even though you did miss out on a 40% gain since last year, it does still have a little bit of room to grow. Alright, so just a couple other numbers we're going to look at. Cash. So the latest reported cash, they have $56 million in cash and $213 million in long-term debt. Now, the long-term debt doesn't look too worrying because if you take a look at their net income up here, they have $225 million net income. They could pretty much pay off that debt in 1 year, so that's not looking too bad at all. If you are a growth investor, I would stay clear of this stock. As you can see right here, year-over-year growth isn't too great. Gross profit margins are pretty high, 52%. So they do have a little bit of a moat. Again, this stock is pretty much at its all-time high, $65 at a $4.2 billion valuation. If you are one of those value investors, I would wait for a little pullback. They are going to use all that extra cash again to buy back some of their shares. Lastly, if we go ahead and check some insider trading, there are no insiders buying any of the shares. So they are all selling it, meaning it is properly valued. So yeah, just a little update on Acushnet Holdings, GOLF stock. Let me know what you guys think, guys. Is stock way too high right now for a value investor? Is it too slow for a growth investor?